Hi, and thank you for listening to this presentation. All of us in Southwest Florida and many in other areas have been through a traumatic disaster event, and many have experienced losses in both their personal and business lives. We're going to cover a few items that you will find of interest in dealing with the storm's financial aftermath. We have a very short agenda. First, we're going to talk about applying for aid. We're going to talk about our emergency bridge loan program, qualified disaster loss payments, the IRS rules, and then we're going to wrap up with some business payroll tips. We went over the people presenting very quickly, but these are women from our team here at Kirkering Barberio. We've got Erin Hentrick, Ashley Salter, Heather Stock, and Tanya Suskind. I'm going to turn it over to Erin to start off the program.
Thank you, Kathy. As Kathy said, my name is Erin Hentrick, and I am a manager on our healthcare team, and I'm going to be discussing the Florida Bridge Loan. On Tuesday, Governor Ron DeSantis activated the Florida Small Business Emergency Bridge Loan Program. This program offers short-term, zero-interest loans to small businesses. You can apply now through December 2nd, 2022, or until all the funds are distributed. These loans are intended to bridge the gap between the time of the initial disaster to when a business can secure long-term recovery funding, such as an SBA disaster loan, which we'll be discussing shortly, getting your insurance proceeds, or some other bank loan. Businesses can apply for up to $50,000 under this program. For this loan, I've put together a list of information to gather before you begin so you can complete the application quickly and efficiently. Now we will hear from Heather, who will discuss more of the disaster loans that are available in detail.
Good afternoon. My name is Heather, and I'm going to be discussing the SBA loans that are available through the hurricane disaster programs that just became online with Hurricane Ian. There are three different kinds of loans. When Hurricane Ian became a declared federal disaster, we were given permission for three different kinds of loans. There's the business physical disaster loan, and that is for repairing and replacing actual physical property. The economic injury disaster loan, or EIDL, which helps for economic loss. This is going to be with no damage. And then the home disaster loans, which are for homeowners, renters, for personal property. There are credit requirements. You have to be acceptable by the SBA. You have to be able to repay all the loans. These are unlike the loans that we had with COVID. These are all repay loans. And if the loans are over $25,000, they will ask for collateral. The interest rates are based on what kind of outside credit source you have available. If there's outside credit available through lines of credit or credit cards or banks, your credit interest rate will be a little higher than those who do not have those available. The term of the loans, again, go back to your available credit. If you have available credit at other institutions, the max term would be 7 years. If you do not have available credit, you can repay the loans up to 30 years. The max limit is $2 million. However, it's based upon the information that we submit to the SBA, much like the COVID loans. So in reality, those loans will be a different value, but they do go up to $2 million. The restrictions on loan eligibility are that they do not cover uninsured losses. So if your insurance company is paying, they're not going to let you double dip. You have ineligible properties such as secondary homes, boats, airplanes, and things like that, which would not be covered. And if you've previously been non-compliant with SBA loans, you will also not be eligible for this loan. You have help with fund mitigation once your loan is approved. And there is refinancing available for mortgages and things like that that the SBA is able to help with. If you decide you're not going to rebuild in your area and you choose to relocate, the SBA loans will allow you to do that. There are insurance requirements for the loans. They're very specific, and so please contact our office for more specifics on those. To apply for the loan, it's very easy. You're going to go to the SBA.gov website, which we've got listed here. You will apply for a loan at the top, which will give you an application number. Then you'll log in and put that application number on the application. At that time, you'll see the screen that you have listed in front of you. You'll walk through each of these items one by one and hit submit. This will put you in the queue for your loan to be approved. On top of the SBA, insurance benefits that you may have available already, such as income extra expense insurance or business interruption clauses and off-premises power interruption failure, also might be available to you. Please contact your insurance agent and check to see if those are within your business liability policies. You also may have assets that you didn't realize available for capital withdrawal. Please look at life insurance, which may have cash value, such as whole or universal policies. 401ks and IRAs also have loan programs or withdrawal of funds that you can replace within 60 days. The 401k and the IRA, all of those funds have a specified period of time in which those funds do need to be replenished back into those programs in order to avoid penalties. Living in Florida and dealing with emergencies that we deal with here, as well as with COVID, it's important for offices to be prepared for emergencies all year round. Every office should consider having a line of credit available to them for emergency use, as well as an emergency use credit card. FEMA is also an option for individuals and families that are just needing assistance after the disaster. It pays for all kinds of different things after insurance for the underinsured and uninsured. FEMA does not assist with any business, only individuals and families. The IRS also has come out with rulings regarding Hurricane Ian, and to discuss that, we're going to give it over to Ashley.
Thank you, Heather. My name is Ashley Salter, and I am a manager on the healthcare team. And I'm going to talk about the casualty losses, specifically the qualified disaster loss. Currently, most casualty losses are not deductible. However, we have a special exception with the federal declared disaster for Hurricane Ian. That is for the entire state of Florida. This loss can be claimed either on, typically you've already filed 2021. This would be claimed on your amended 2021 return or on your 2022 return. And that timing would depend on when you have all of your costs gathered for the loss. The loss does have some deduction limitation rules. There is a $500 haircut right off the top. The first $500 is not a tax deductible loss, as well as if you receive any insurance proceeds or federal funding or other reimbursements, those will reduce your loss as well. So typical loss items are going to be real property and personal property. So that real property being buildings like your personal residence or commercial or rental properties, as well as often the trees and shrubbery. Also structures attached to the residence, detached enclosed structures, deck, car, boats, and several other items. This is not a complete list. Note, it's a common question about food. That is not part of the casualty loss for tax reasons, but you may apply for your insurance policy. So how do you prove the loss? If it's, for example, a business or income producing property like that rental property, and it's completely destroyed, that'll be calculated using items of your original purchase costs, plus the improvements over the years, and some other adjustments. It again would get reduced by any insurance proceeds or other reimbursement, and also reduced by any salvageable items. This value can also get determined by having an appraisal. If you receive one of those federal loans that Heather just spoke about, the federal loan appraisal, if you have one done with that loan, could be used for this as well. So how about if you have partially destroyed residential property? There are a couple different methods of calculating that loss valuation. Typically, it's going to be the difference between the fair market value before or after the hurricane. Again, you may need to have an appraisal. You could also use things such as the cost to repair the repairs to restore the damage or restoring landscaping to original condition. So there could include removal of damaged trees, pruning, and replanting costs. Another method, if your costs are less than $20,000, would be getting at least 2 independent licensed contractor repair quotes, so that way you have that proof and having those repairs underway. And also the de minimis method, when your repair costs are less than $5,000, having a written good faith estimate cost of repair. So the important thing here is to be keeping your receipts for all of the repairs. Another aspect of disaster relief are what are called the Section 139 payments. These are made to individuals to reimburse for things such as personal, family, living, and funeral expenses, or repair to a personal residence, or for contents if they lost their belongings. This is typically done by an employer to an employee. The expenses you're reimbursing must be reasonable and necessary expenses. They're not taxable to the individual, so this is not payroll. However, it is still deductible by the employer as a business expense. The best practice is to have a written policy, but it is not required.
Thank you, Ashley. This is Tanya Suskind. I'm also from the healthcare team. I wanted to talk to you for a moment about payroll considerations. You may remember that in the aftermath of Hurricane Irma, there were tax credits available to those employers who had paid their staff for the storm days. While there's no guarantee, we do hope that there will be similar credits offered this time. Therefore, we're recommending that employers plan ahead by creating and using a distinct pay type for the hurricane paid time off. That way, when it's time to apply for the credits, the information can be accessed easily and identified clearly. For those employers using our QuickBooks Payroll platform, it's a simple matter to create a secondary pay type for the hourly employees called Hurricane Ian Pay. Now, here's a screenshot of what it looks like in the employee profile pay type screen. And you would just click on that add pay type and enter in the name Hurricane Ian Pay, make the pay rate match, and you're good to go. And if you are on a different payroll platform, they should be able to set up something very similar. Now, if you've already run payroll, just create a file named something like Hurricane Ian Payroll paid 10/7/2022 and include in there any payroll reports and any other relevant notes so that once again, when the time comes, we'll have easy access to that information. And KB will be on the lookout for any tax credits available, and we will let you know if and when they do become available. Thank you. And now let me turn you back over to Kathy.
I hope that you found this interesting and our discussion met some of the questions or needs that you had. We tried to make this a very general conversation, but if you do have additional questions or if you need us to dig deeper into some of the regulations, please give any of us a call. We really appreciate your listening to this, and thank you for being clients of KB.